I was working on passing that prompt goal. Like it might try to reverse because it's 9:30, but I'm not gonna go after any sales. Let me see, what's my trade? We're just gonna let that ride. I don't see myself getting into something else. We've already got about 700, 800 hits for the day already. If you took that trade last night, oh, all the TPs was hit. Cool. The green's crossing the red, showing to get into a buy, and everything's above the 50, and it's below the yellow. That's what these green dots are popping up for. So I've actually turned them back on because it helped me see it clear, and it does it for the sale when everything's below the 50. Green crosses the red going down. So the TDI, we're gonna get into it. When it shows those dots, those are supposed to be the most accurate signals on using it. And so along with the scanner, like how we got here, honestly, these sales wasn't no good. But when they were going off back to back at the same time, those would have been the most accurate trades. Um, the first one was actually a good one because this went off before the ketchup and mustard said sale. It didn't say sale till here. But on the TDI, it went off at the open of this candle. So you actually would have caught that whole candle down to the blueberry if you had a ticket using the TDI. I just wanted to get that out the way. So that is the first most accurate way to use it is to wait for everything to be above the 50 when it comes to buys and below the 50 for sales. Another way to use it is to wait for the green line to cross the yellow line. If it crosses going up, it's a buy, and if it crosses going down, it's a sell. Now I only use that method on the hour time frame or higher. Really, the day time frame has been the best one for me because you can literally hold these the whole entire time when it switches like that, and it's pretty accurate. I'm also still sticking with the water being in the right place. So I'm not going to take them because they're popping up. I'm still trading with the trend as well. So that's another thing I'm doing. But for example, like this, giving off these buys, and we got the green crossing the yellow right here. You could literally got in right here and held this thing until it crossed the opposite way, which is right here, all the way back out right here. And I'm gonna measure these pips right there. It's the counting. Start here, go all the way to right there, and that is 2,600 pips with a penny. The lowest lot size, uh, you still would have made like $260. And that took a long time. Not gonna lie, I said this thing took 40 bars. That's 40 days. If I go to it exactly, is that how that's doing it? I don't know why I skipped it. Oh yeah, because of the weekends. Yeah. So that actually took almost 2 months to make that. But that's the least amount of money you would have made. So that's what I'm going to base this off today, just to show everything that how I use this so that you can use it the same way. Hopefully it works for you and you can utilize it the same way. So I'm just going to start here. If we got you got this because you can get this as alerts to your phone. You could set this as alert as every time the green crosses the yellow. Um, let me show that right quick. Let me go to alerts. I call it the money cross the honey. That's what I call it. So when you go to your alerts and you go to TDI, it got the RSI crosses the yellow. You can save that as an alert, and it doesn't tell you if it's crossing up or down. You're just going to use it every time it crosses. So this is a way to hold trades long term. This is an easy way to get in. I know it's kind of difficult because I am big on risk management. I am figuring that part out as far as like the lot sizes being used because you don't want to overdo or over risk your account. But there's not too many times where like this is the worst case scenario where this crossed here and got out like right here. And I'm going to zoom in on this so we can get this in detail because I know some people are going to know exactly what I'm showing. We got the cross here. So you would have got in on this candle, would have went from 2660, 27, maybe about, I want to say like 400 pips. And then it said to get out here. I believe that would have been here, unless it would have been the open of the candle. And that's going to be another difference because when you set this alerts, you can put this on bar, once per bar or once per bar close. If it's on bar close, it has to wait for that candle to close for it to give off the alert. So it could have been here, which isn't much profit, or it could have been here as a small loss. And it would have been, let me see, 2660 down to the water, 46, about 140 pips. So that's worst case scenario. I'm going to go over all the mistakes, all the bad signals, basically. And then I'll go over the clean ones first, just to show that this is the worst that can happen. Where, okay, this said get into actually, it will still be a buy because the water's on top. So it will buy here where this candle is, and then exit here on this candle. That's still a good trade. Okay, I want to test something like this. It would have got into a buy here, but then exited here. So that actually went nowhere. It would have got into a buy here, and then at the open of this candle is where it would have got out because that's where it crossed. And then it would have got back into another buy after that, and that would have been good all the way till here. This was the next time it crossed. So I've been looking at this because it's going to position trade. It's going to hold trades for days, weeks, even months at a time. And I've been looking at the consolidation zones for it, like something like this, where it's just crossing back to back just to get the worst case scenario. We got a buy here, which would have been the open of this candle, and then it crossed back here. And so that's pretty much almost break even or a small loss. Those are going to be the worst trades it's going to give out. This requires a whole lot more.
M2 on the TDI? Like I created a W, would you take that leg?
You said what now?
Go back over to the right here where you said right there. You see it make that W? Would you take that off that cross coming back up? Would you do you look for W's too? On the
Yes.
TDI? Okay.
Yes. And these are a W. Everything's above the 50. So this one technically would have gave off both alerts because it gives a lot alerts for the crossover. Actually, it didn't give that off because they crossed at the same time. It would have gave an alert for the RSI crossing the yellow though going up. So as long as we're still trading with the trend, we're not taking every single cross and we're not taking every single W. We're only going to take W's. There's two ways to do it. So if it's just doing a cross, the green crossing the yellow, you can take those every time as long as you're trading with the trend. So we got the water on the bottom still. We'll take a W even if it's, let me see if I can find an example.
Trade with trend. Okay. Of course.
Right here, like right here, for example. The water wasn't on the bottom on this one. It bounced off the blueberry though. So we got the blueberry holding it, and then the green crossed the yellow here, and it's below the 50. We still could have took that trade. Let me see. That would have been your entry would have been in here. Yeah, because it starts at the open of a candle.
When we take
So
the trade, once it breaks above the 50, the next candle over?
it's I'm showing this to show the TDI below the 50, but
Right.
it's best if the water is on the bottom. But this is only for when the green crosses the yellow. Now, me, I would have took this because I'm noticing it held the blueberry instead of the water being on the bottom. The blueberry is stronger than your water. So me
Right.
noticing that it rejected the blueberry and then I see this cross, I still would have took this trade. But let me see. I'm trying to find the perfect example where the water's on the bottom and the green and the yellow are below the 50. I don't see any. I think it'd be better to see on a lower time frame to do it. That's why I've been sticking with the daily because it's accurate like that.
So this is for your position trades. So you've been keeping it for a while.
hmm Because it doesn't cross over as much on those higher time frames. So when it does cross, it's a better confirmation. And the only thing with this is when you get people new to trading, they want to make fast money. But if they build patience and stick with something that's more accurate, you will make way more money doing it like this. Let me say, I cannot find one. Yeah, that's because the whole method is that it's better when it's above the 50. You know, these lines over here, you will put your 50 on your RSI and you're taking it every time it crosses when it's above. So like when it crosses above the 50 here, the water is
It's a
usually
good
always on
trade.
the bottom.
Right.
Yeah.
I see that.
And so you can take this is probably one of the worst ones because let's say okay it takes in the buy here. Let me see my thing's lagging right here, and it actually said that at the same time the scanner said the buy, but I'm trying to keep it lined up. Okay, buy right here on this candle right here, and then it crossed back down.
Right.
That's right there. So it was still in the same spot. That was a break even trade. That's like worst case scenario of what I would want this system to do once it's programmed. And so it crossed back up right here. So when it did that, it's going to get right back into the trade because the water's still on the bottom. The green crossed the yellow, everything's above the 50. And it would have held that until it crossed the yellow back down, which is up here on this candle. So it would have been in from here, and these are 4 hour candles. This is like 1, 2, that's 3 weeks. And if I was to count the pips with it, there, and let's see, there. Open another candle. I don't know why this on my line. Everything's popping up. We got to redo that. I wanted to get a exact measurement of the pips. This candle. Like 600 pips, which is true. That's what we did for this morning. So that's a good trade. 600, a lot of people trying to get 100. You just did that off of just one trade. You can set your alerts to just take trades just like this. But Chaz been wanting me to come up with a bot, and I want it based off the TDI, and so that's why I just been backtracking this, back testing to see what would be the most accurate way to tell it to get in and to get out. So that's one entry, and that works good on a 4 hour and daily. The other one is when this is giving off the dots. And so basically the yellow for the sales, like the reason why it gave off this, the yellow has to be on top And when this crosses the green and the red, they have to be below this yellow line. It's going to give off a sale when that happens. And if you look at this, the water was on top on the candles and the scanner gave it off. They gave it off at the same time. So that's
But
more confirmation.
but the
Go ahead.
yellow's above just a little bit above the 50, isn't it?
It is, but the green and the red are crossing below it.
Okay. Right.
That's
Right before
that's
the dot. Okay.
yeah, that's the key part. The yellow is best if they're all below the 50, but the way that this works, it still gave off the signal for it. Because at the actual time of the crossing, the green and the red, they were below the 50 line. So if those dots
Is
are
it below?
popping
Or is it
off,
right next to it? Can you zoom in a little bit? You know, I got them bad eyes, man.
yeah, I mean, you could. I could make it bigger.
Yeah, there you go.
And see, yeah, the yellow was here, but at the time this green and red actually crossed, it was below the 50. That because the red is your signal line.
Oh, okay. You're talking about so when the cross of the green over the red you're talking about.
Yeah, there's two entries. So I
Right,
went
right.
over the green crossing the yellow. That's one type of entry. Then there's the one where the yellow's on top of the green and the red, and the green crosses the red down.
Red, that's the entry. Right.
Yeah, and they're below the 50. That's what makes these dots
That
pop
dot
up.
pop up for the red. Okay. I
Yeah.
get it.
So when you go to your alerts,
Mm-hmm.
like I go to this TDI sale, you have two. So you pick the what you're trading, you pick the condition, the chart, which is the TDI, and then you got three options. You got short, which is your sell, your long, which is your buy, and then you got RSI crosses yellow. So RSI crossing the yellow is just the green crossing the yellow, no matter where it's at. But
Which
for it
direction?
to, yeah, but
So
for
when
it
you get
to
on, you
specific,
see it, you just find out which way is the trend and you take it if it's going the way of the trend. Is that correct? Or?
yep, yep. So if it's crossing up and you trending up, you're gonna take that
Mhm.
buy,
Okay.
and you get out when it crosses back down. And then, of course, vice versa for the sales, crossing the green down and the water's on top. We're not going to take the sale just because it crossed down. You could, but overall, you would have less accuracy if you're trading against the trend.
Mm-mm. Trade with the trend.
Sometimes that would be good if it's a reversal because that also could be a good reversal. So sometimes those will be good, but I would suggest mastering trading with the trend first, and then you can play with reversals on your own time. But
No, let's not do that.
yeah, yeah, you can because I spent my first few years trading mastering reversals. That was like almost all I ever traded. So my trading has been much better since I just stuck with the trend.
Right.
But okay, and the reason why it gives off these short is because it has to be below the 50. It'll give off the long, which is the buy, because it has to be above the 50, the green and the red. It's best when they're all on the same side though. So yeah, that's why that gave off that sale. And along with the scanner, they were saying the same thing at the same time. That makes that trade much more accurate.
Okay.
So we got right here on this buy, I'll make it big again. We got the buy because it crossed up right here. And they were all above the 50. So it gave off that buy. Now that buy, it didn't take off right away because that's right in here. Ended up coming back, retesting, doing a whole nother W. The scanner gave off buys, and then we had the green cross the yellow right here, and that would have been good to go. And that would have rose until it crossed back down here.
Right.
And this is another re-entry. It got a green dot here. Everything was above the 50. The green crossed the red going up. So it gave off another entry in between that, which was the beginning of this candle. So you could have got this candle here, 1, 2, 3. So these are 4-hour candles, so that's 12 hours. And I count the pips on that. Yeah, up to that high. About 400 pips, 440 pips. That's a good trade.
Yes, it is.
Yeah, you take one of that. That's 12 hours. You pretty much done for the week off of one trade. I ain't gonna lie, I'm not even gonna complicate it. That is the easiest way to use the TDI. I have a PDF.
Can you show the TPs on there? Where would it show? Would it show that TP at that top where it peaked at?
Let me see.
EDR?
I don't know. Let me see. I'm gonna see if no, because it's July. It would have showed it when it was happening,
You
but
can't do that.
no, it
History.
won't go back that far.
On your phone. Okay.
You know what though? Let me see. July. I'm gonna go to. Well, no, I don't know. It'll show me the month, but I don't. That's still not gonna go back that far.
You can't do past that far back. Okay.
I think it'll go back 6 months. Yeah, because it went back as far as August, so it just missed that.
I was just wondering with ADR, ADR would say it. So, to get out, get your money and get out. So I won't, retrace on you and lose all your profit.
I believe so.
Mm-hmm. Okay.
If it did a buy like that, it definitely hit some of them. It probably hit all of them on the daily on that day or the weekly. So it definitely would have hit something because that's a lot of movement. It would have hit at least 2 or 3 of them. Like today, what it did, 800 pips, and it hit all of them on the daily. Yeah, because I'm gonna end up having to post that, but all TPs was hit. Yeah, it did 100%, and now it look like it want to keep going.
Yeah, I took that trade this morning. I did the second TP and got out.
Good. Yeah, it's almost always going to hit the second.
Yeah, that's why I won't be greedy. So take my money and run. I ran.
Oh, I ain't gonna lie. The fact that you getting it, I feel like I'm doing what I'm supposed to be doing. Some people,
No doubt.
they already know what
bro.
they're
Appreciate
doing.
you, bro.
Yeah.
Appreciate it.
Yeah, and ask questions. I like that too.
Mm-hmm.
Get me pumped up.
Mm-hmm.
Man, you're making me understand it more and more, Fly. I appreciate you, brother. For sure.
That's good. That's good.
Important to get this, man.
If everybody knew, I would suggest to go over the course in the No More 9 to 5 app. Look for the trading course in there and go through that, and you'll be able to better keep up with what I'm doing. There's one thing they don't do that I do is the TDI. That's what I do differently than Chad or Sugar, but they still use the RSI, but I use the TDI. So
more confirmations, I feel, is better. The better, hey, why not? As many as possible.
Yeah, you got a little more bells and whistles on it, but yeah.
And then when you get the TDI to line up, and then you get the buy on the scanner, come on.
Yeah, it's a win. So let me see, because even here, this gave off this buy right here on the scanner. Mm-hmm. We had the green cross the yellow right here at the same time.
Mm-hmm.
So
it was telling us the consolidation was kind of coming, huh? It was going to go back down.
Yeah, but if you got into that buy and just held it,
you were good.
You would have been good, yeah.
Right, because I can see we're crossed back over on top. Yeah, the green crossed the yellow and the red at the same time. Mm-hmm. So let me ask you this: when they're all three crossing like that, where you at? That's even a stronger indication, isn't it?
Yes. Well, see, it's best if the yellow's on the bottom and then the green, then the red, then the green, because that's why this gave off the buy.
Right.
You got by the time
yellow, red, green.
Mm-hmm. Because I got mine set to where they got to close that way. See, while this is in real time, this could have been going up and down, and it could have crossed while the candle was forming. But like I'm looking at a 4-hour chart. 2 hours in, it could have looked like this, and then the last 2 hours, it could have crossed back down. And then he's like,
Right.
"Oh man, you got in too early." I wait for it to confirm the close, and that's why it went off right here. So by the time
The
that
close in that
happened,
last candle. Is that what you're saying? Okay.
because once it's closed, it's confirmed that it's crossed. And so we got the green, the red, and the yellow in that order back to back, and it's
Okay.
above the 50. That is the best entry. It's the safest entry. It's not going to be your earliest, but it's going to be your safest. It's the most confirmation.
Okay.
And so when it did that, what was that on this candle?
Yep, that candle right there.
Yep, you would have caught that whole candle up. Because when this goes off, it's going at the open at the beginning of the candle. So it's not going to be when the candle's done. It did that here. Okay, this is down. Bam, that pops up in real
Yeah, but
time.
it brain.
Watch it.
Okay.
Yeah, and you would have entered in, and you would have caught that whole 4 hour candle up.
Ooh, that's how many is that? Measure that.
Yeah, let's do it.
That's exciting when you see that now, and I can look for that.
Yeah, you get what it's showing. I guess I can let me redo that. All this stuff is in the way, so it's trying to tap on too many things at once. Yes, I gotta move this way. Hopefully it don't overlap again. There we go. Bam, right there. That 4 hour candle is 460. The way you count this, you're either going to add a 0 to the left side or take a 0 away from the
Zero
right
way.
side. Yeah,
Mm-hmm.
because it's gold. Gold. That's the only reason it counts like that. And these are counting ticks, so we would take away the 0. So
That penny would have got
469.
you $46.
Yep, the penny, the least amount you would have made $46 in 4 hours, and that's just the least.
That's at least 10 cents. Just put the zeros. Do the math.
We definitely all gonna get past that. That's just you only trade in that until you see what's going on and you get it. You're like, okay, and you turn it up. You do at least 2-3 pennies in 4 hours. You got like $100 and some dollars, 120, whatever you got. Can't beat it. I am going to go over a few more things. I'll get more in depth with the TDI since we on it, but that right there is the basis. Everything else is just, it gets real technical. So another thing, the blue bands, that's your support and resistance. So I'm going to get into this. Another entry, and this is the latest entry possible, is when the green breaks out the blue. When it breaks out the top of the blue, that's a buy.
Those are Bollinger Bands?
Yeah, those blue bands here.
Yeah, when they squeeze, that's when
Yeah.
usually it's going to pop
It's
out of the squeeze,
consolidate.
right?
Yeah, so when it's squeezing, it's consolidation. And then when it pops out, you'll see how they started to expand.
Mm-hmm.
They were kind of tighter right here. And then it finally broke out. And
You see
then
that?
as we see price on the candle, it did that big old shift candle, broke out finally.
Green.
Came and did all this consolidation. And when it came in, let me see.
Let me ask you a question. It looks like that green crossed just under the 50, though. In the
Where
red.
about?
Back to the left over there. On that buy, we send that candle. Yeah, where it squeezed just after the squeeze. Come over a little bit. See the dot right there. Yeah. Isn't that just below?
That's below the 50.
Mm-hmm.
Yeah. So we either would have took the green crossing the yellow, because it don't matter where it's at with the green crossing the yellow.
Okay.
As long
But
as
when
we're trading off the trend.
Oh, okay.
And so when it crossed out the blue, we could have took that buy. The only time it matters.
When it crossed out the Bollinger Band, that after the squeeze, take it right there in that spot. Okay. I see what you're saying.
That could have been an entry, so you could have got in on the green crossing the yellow first, which would have just been this candle right here. You would have caught this first little candle. But then if you didn't, it broke out the band on the next candle. You caught that up. And then it consolidated, pulled back. And right here, this is why the green dot went off, was our everything above the 50, green crossed the red up.
Red up too, yeah.
and that's your other entry. Bam. And as far as I'm concerned, this still going because the green ain't crossed the yellow back down yet. So for exits, you can use the green crossing the red for an exit. It depends on what type of trader you are. I tell people if you're holding your trades, just take a partial when that happens. You don't have to necessarily get out. Take some of your profit.
Because it may go back out.
Hmm.
Okay.
But this isn't a true sale sitting. It's just a pullback sitting. There are some times where it can do this and just tank on down. But these aren't sale signals. We're in the buy still. We're still with the
And you're still
trend.
getting all those green dots. 3 of them
Mhm.
on the way up. Okay.
Those are all re-entries. Other places you could have entered back in. So I ain't gonna get into the boring stuff. But there's what we got four. Is it four? The top 4 TDI strategies. We got the TDI signal, which that's the green crossing the red, and everything's above the 50 for the buy, below the 50s for the sell. We got I forget what the SP stand for. We'll go through it. The SP reversal, um, the TDI hook. That's when it breaks outside the Bollinger Band, and then the squeeze is the when it's consolidated, and you're actually doing the opposite. So when we buy and everything's above the 50, if everything's squeezed up above the 50, but it's in consolidation, the blue bands are real tight. We'll actually be looking for the sell instead of the buy when it's above the 50. So here we go. TDI signal. The beauty of the TDI is in its simplicity to plot the direction of market sentiment in relation to price action. This strategy is the everyday strategy for all TDI users, regardless of the type of trader. Scalper on the 1 minute or 5 minute chart, active or swing or intraday charts, or position trader on the daily chart. To trade the TDI signal, look to trade the green line crossing the red line with good angle in the trend direction of the yellow line. So we're gonna look for the green and the red crossover. At the crossover, look for the strong angle. Basically, the yellow is where it's supposed to be. The yellow is like your trend on the TDI. Compared to the direction of pricing TDI green line. Enter if price action and TDI line, exit when the green line crosses over the red, blue, or yellow in the opposite direction. So you can do it for either. Now, when the green crosses the red or the blue, I say take partials. When it crosses the yellow, that's when we're getting out. It could still keep going if it crosses the yellow. It could end up crossing back the opposite way again. But to have a system to it, that's going to be at least like that's foolproof. We're just going to get out when it crosses the yellow. That's all right, let's reset, get another entry whenever it comes back in. So let me see. I don't even know if this is going to show this better than I was just doing it. And this is recorded too. Crossover of green and red in the direction of the yellow line. So basically, they're all going up. That's our buy. This is our green crossing our red. It's showing it crossing up here and then showing the green crossing our red going back down here. After it's crossed out of the blue. But I ain't gonna lie, that don't look clean to me. I was showing better examples on the charts. So here we go. We got our W because we're always still looking for N's and W's. And that's the thing, when the greens are crossing these lines, you should clearly see an M or W. You're going to see it every time anyway. It's not crossing until it's already formed. So we'll have the green crossing the red, and then we got it crossing the yellow. I'm looking at the bottom, so we could just see the TDI. But it's showing the same thing. You can see the candles and just follow along with it. So you see it, that's our entry when it crossed. And then it came back in and crossed the blue the opposite way. That's our exit. I don't want to get all technical, but they call it the shark fin. So when it's crossing out of the blue bands and then cross back in, it's called the shark fin. This I seen this on one example I just showed y'all, and it actually looked clean, but it's seeing the levels. You should still see the three levels. So we got the green crossing the red here, and we're just going to assume we're trading with the trend. It's not showing the water or nothing like that. But we got the green crossing the red. That's the entry. It broke out of the Bollinger Bands, came back in. That's an exit, or I would say take partial, because then the green crossed it back up. So that's another entry. So we got level one at the beginning of our entry, and the level ends when the green crosses the blue or the red back the opposite direction. That's the end of a level. We see another entry, that's the start of level two. Then it repeats itself where the green crosses the opposite direction, either the blue or the red again. That's the end of that level. When it gives us another entry, that's our level three. I'm going to show that on the chart. I hope I find that same exact spot because it was like super clear. And that's something we was going over. Yeah, right here. So we got our green crossing our red. This is our entry. You cross the yellow, that's our entry. That's level one. Level one, consolidation. It crossed the blue back in, it consolidated. We got our signals to get back in the buy. We got them here, because it's all consolidation. And this one, that's our next entry, which just finished. So we got a level one consolidation. We got a level two. Now it's consolidating now. This is pulling back, but we can very well much get another entry for another buy before this is over. And that will confirm our three levels. Another way to confirm it, and I wanted to say this last week or even put it in the chat. On the 15-minute chart, this was our blueberry. Our 1 hour Mayo is our 15-minute blueberry. Same thing. When it hits those, this was a reset because it's been buying already. So when I see a reset, I'm automatically looking for the 2.5 to 3 days to get the full three levels. I didn't catch this entry. I even didn't think of it at the time because I know Joey said he caught that off the blueberry, but I was like, yeah, that could have been held all up until the three levels played out. So far we got one level consolidation and we got two levels today. So if this goes right, we can get a reset. And what that'll look like on the TDIs, it could come down here, it could come to the yellow, and it can end up bouncing off of it just like this again, and that green cross the red going up again. And as long as everything's still above the 50, we're going to get another buy signal on the TDI to get into another buy. And we should get one more day out of that. Or we could get one more day. It's at least 2.5 days. That's already played out because we got two levels already. So there's a possible whole nother day of buy coming in. That's what I'll be looking for. I don't know what time of the day is going to come. It could be the end of the day today. It could be when market open tomorrow, which is 6 p.m. today Eastern time. Either one of those can come and we can get one more level. So that's what this is showing, that you can read the levels using the TDI. I am going to have to make sure I send this to some people because this is another way to explain the levels. Okay, the second entry is the SP reversal, swing position reversal strategy. This is a counter trend type trade. The market tends to cycle up and down in the normal trading range the majority of the time. At times, the market will make extreme moves beyond its normal range, which is the overbought and the oversold. What that is, because I'm saying a trade above the 50 for the buys and below the 50 for the sales, these white lines. I got mine at 70 and 30. They got 68, 32. It don't have to be exact. You can even put 80 and 20 sometimes, but that's a little more extreme. But basically, it reached up to this 70, and so now it's selling. That's the overbought. And so now it's going to sell. And then we got oversold. It gets way down here, and it reverses. That's not 100% either. I don't really use that as entries To me, it's best. Let me see if I can find examples of that. Okay, we got it right here. It did it and it pulled back, and we got the green crossing the yellow back down. I ain't gonna lie, I just want to say the money crossing the honey because that shit just sounds so clear to me. But but we got that crossing back down, but all it did was reset, and then eventually everything crossed back up and kept continued to buy after that. It continued to buy its way up. So it's not a. This was actually a good sale too. If you wanted to catch a reversal and do that sale, you could have took that and got a few pips up out of it. But it's best to just wait on your best setup and keep trading with the trend because eventually it did reverse and took out those highs and eventually shot all the way back up. So that's what this is for. And it's basing it, let me go back to the chart, off of the yellow getting that high. So if the yellow does get this high, it's more accurate than basing it off of the green doing it and taking the trade. Because if we look here, this was the highest it got. And if we look at the RSI, it was like 65, 66 range. So that's why I have mine at 70. They got theirs at 68. So it got close. And if I go down, I'm probably not going to see it for the way down there. Well, I might on the hour chart. It's just been buying for so long. So this is best 4 hour daily. I use the hour on up. I don't really like to use the 15-minute like that. I use the 15-minute when I know what direction I'm in on the 1 hour, 4 hour and daily. And if my 1 hour isn't giving off any trades, any signals, then I'll go down to the 15-minute. The same way I use the scanner, it's all the same. So if I know I'm buying and my scanner is going back and forth, giving off sales on the 15-minute, I'm going to ignore those sales and wait for the buys if I know my 1 hour, 4 hour, and daily is trending up. So I do the same with the TDI. I could, let me see, I'm kind of worried. So we already know this is a buy market because I know I got people that's never been on here. And if y'all have, you should have the scanner. If you remember, you'll have the scanner. So like these were some sales. You can make money in these sales, but I know all the buys are going to be bigger. So when I go into my 15-minute, I'm only going to take those buys. Like these sales right here were no good. If I had to just wait on the buys ended up being better. That was last week, and last week was choppy as I don't know what. It consolidated. And we're only on Tuesday, so it's finally broke out of that consolidation. It's buying again. But like all these sales was good. When it was trending, the sales were good. Nothing but good movement. Now I'm going back weak. So but when I know I'm looking for buys, and I always figure out what I'm doing for the week. Sometimes it do mix up, and I catch them both if it was just choppy like that. But if I'm trusting my one direction, and you go down to the lower time frames, you're going to get easier, better confirmations trading with the trend. Let me see. So I am going to explain. Look for the yellow market baseline to hit the 32 to 68 level, or possibly move beyond it. I got mine on 70 and 20. Wait for the yellow to close, and then, like for the buys, it will close below the 70, and then you'll see it start to reverse. Enter the trade when the green, red, and yellow lines cross over in the direction of the reversal. So you'll be looking for the green to cross the red going down or the yellow going down. I'm sticking with the yellow going down because that's like the final confirmation that is going to do a pullback or a complete reversal or whatever it's doing. And exit when it crosses, yeah, it's an extra trade when green crosses over the yellow line. So I just stick with the yellow line. That's how I know I just need to get out of that. TDI hook. This is the third strategy. TDI hook trend setup, intraday reversal setup. The TDI hook is another counter trend strategy designed to catch intraday reversals when the market extends beyond the volatility band and below the 32 level or above the 68. The name of this strategy derives from the bending curve shape of the green line, much like a fish hook. That's what I was calling the shark fin, as it moves backwards towards the 50 level. Monitor the yellow line for overall trend sentiment and be watchful for price continuation before a reversal occurs. Price can be stubborn and move against sentiment, and when it is exhausted, it may then turn. So breakdown of the strategy, we're going to look for the green line to move beyond the 32 or 68 and beyond the blue vitality band. So that's when the green is going to break out of the blue. And then we're going to look for it to come back inside. So if it was buying and shot up, like I was showing earlier, we're going to wait for it to come back in to confirm that it's reversing. Look for divergence or potential continuation. Enter trade with a tight stop loss above the previous high or below the previous low. Exit trade when the green and red cross over. So this is going to be like a little bit more difficult, but it's like this. We got our green and our red crossing here. This is our so-called chart frame. So the green crosses the red back inside. We're going to get into that buy, and you're going to exit when it crosses in the opposite direction. It does another sharp frame, breaks out the bands, cross back in. That's our exit. And we're still trading with the trend here. The water's on the bottom. Tool that took that buy. That sell would have did no good if you tried to do that the opposite way. You got the sell right here. That's why I said to also look for the divergence. And divergence, to get at a quick explanation, because I've explained that, I don't want to get too far off of it, but our RSI is right here. If we go to the candlesticks, that's where our candlesticks are at when it did this M. The candlesticks went up, but what the RSI did was go down. So that's divergence. The RSI and the candlesticks are doing opposites of each other. The RSI is going to show which way the candlesticks are going to go before the candlesticks show where they're going to go. So while the candlesticks were going up, this RSI was going down, showing it was going to sell. That's what divergence is. That's a little more advanced to spot that and take trades off of that. But that's another way you can use this TDI to take your interest. And the way it worked in here, they weren't above the 50. I mean, below the 50, excuse me, because we're looking at a sale. It wasn't below, but we had the market baseline on top of the green. It basically made an M off of it, and the green crossed the red going down. So you would have used that as your sell, or right now it's breaking outside of the blue band. It currently just did that on this candle. So this would be our sell entry if we were to take this. You could enter in the sell here, and then you put your stop loss at the high, and you basically are going to take this until it looks like this again. Breaks out the band, it's going to make a W outside of it, and it's going to cross back inside, and that's when you will exit. Everybody see that? Julian, do you see that? I'm bored everybody to death. All right, then. Was that the last one? No, there's the squeeze. These are just more examples of it. Break outside the band, come back inside the band. So entering your exit. The squeeze, I use this sometimes. It works when you see it. Because when consolidation is first happening, you don't know that that's consolidating. It might look like it. Like last week, it pretty much consolidated for 3 days straight. It stayed within a certain range. So I'm gonna go after So it's still showing that. I'm gonna go over this. That's showing divergence. We're getting to number 4. And I'm gonna show it on the chart, and that'll be it. I can go over that because last week consolidated. TDI squeeze, the breakout strategy. The squeeze strategy is a breakout trade. It derives its name when the blue volatility lines compress or squeeze together due to price consolidating into a tight narrow range with low market volatility. Why they miss that? Why they miss me up? Volatility. The location of the volatility band squeeze most often determines a favorable trade direction. If the squeeze occurs near the 68 level, look to trade short. If it occurs near the 32 level, look to trade long. If the squeeze occurs near the 50 level, be aware of economic events. Blah, blah, blah. We know how to trade off the 50. Breakdown of the strategy, look for the blue volatility lines to compress or squeeze together. Identify the placement of the green, red, and yellow lines to determine potential break direction. Enter a trade when the green line breaks one of the blue lines in the direction of the red or yellow line. We're going to look at what that looks like. Exit trade when the green line crosses in the opposite direction, basically. So, high squeeze. We're looking for sales at the top of the TDI. The Bollinger Bands are close together, and the green line finally breaks out the bottom of the Bollinger Bands, the blue lines. What this is everything is on top of the green, basically. When that happens, we're looking for a sell. Opposite direction. The blue broke out on top of the Bollinger Band, and everything is on the bottom of the green line. We're looking for buys. We'll be looking for buys when everything's below the 50 in this case. So it's the opposite way, opposite direction. And this is really only during consolidation. This is the only time we're using this kind of entry. I ain't gonna say the only time, but this is when this is most accurate. So if we got everything above the 50 and it breaks out the blue, you can use that as an entry, but that's like the worst entry using the TDI in that situation. But when it breaks out the blue going up and everything's below the 50, that's more accurate because this is usually when it's coming out of consolidation. This is usually at level 3 and it got real choppy and it's a breakout. It's a breakout trade. So that's why this works best when that's happening. I'm going to show it on the chart because it will look better. And I'm really just going to show last week. It was consolidating. It's perfect. I did it for like a few days. Let me see if I can fit this in. Ooh, this looks like a hot mess. Now, what it did, of course, eventually was break out and buy. Man, I keep I'm at the car. Back to back. Okay. So it broke out here on this last day. This was the final breakout, which is what led up to where we at now. And let me see. Everything was below the 50. It broke out above the 50, but everything else was below the 50. So we're basically in our buy zone. This is when it broke out the zone out of the blue bands, and it was at a 35, and it broke inside. So we could have started to take entries here. We had our green cross our yellow here, which was at the 46, still below the 50. Green crossed the red below the 50, and then it finally broke out here, and that was our final confirmation to get into that buy. The reason why this works is because the blue bands are tight together. When they're in a regular trend, they're spread apart. I'm looking at this on the 15-minute. That's why I like the hour. To me, the hour is more clear. I ain't gonna lie, this still don't look clear to me. That's why I wouldn't even took these. But I think the main key was that everything was below the 50 when it crossed, and then finally broke out here because it's not really down in this area for this buy. And if I go to these areas, it kept breaking out the bottom. But when it was breaking out um, the bottom, everything's above the 50, so those should be good sales. But to me, those weren't any good. Like this right here, this one was the only one that was decent. But it really only broke out. It broke out here. It broke out here, which weren't no good to me. And then it broke out here. Whereas this one, if you had took this one, it would have did what it was supposed to do. Because even though, like, if you took the sale, which is stop loss at the high, it took like a few days, and then it finally came and hit the mayo on the hour. I actually took this sale on that. I took it Wednesday when I called that sale, and I was saying I was taking it to the 15-minute blueberry. This was part of the reason why I took it. It's just I didn't hold it until that day. I actually ended up getting out. I hit 2 TPs, I remember, and then I just got out the trade. I didn't let it go all the way to the blueberry like it did, because it didn't do nothing for like the whole next day. So, with that being the fourth strategy to the TDI, it is the least accurate one. I've used it sometimes in consolidation, and I've done that on the 15-minute chart. I really don't use that entry like that. I wish I could find more examples of it, but I don't even want to go in on this strategy because I'd rather just not trade. See, like this right here is one where it was tight together, it was consolidating. We got a lot of divergence because it was slowly going up, but the RSI was going down. It was close to the sell zone. And then when it broke out above the 50 for the sale, that was actually a decent sale. Could have got out, like got into the trade, got into the sale right here. And then it shot down for the next 2 days. It came back in right here, opposite way, crossed back up. We could take our partial here or get out. If you held, these right here were the re-entries. Green started crossing the red going down, yellow above it below the 50. And when it made its W and crossed back up, the green crossed the yellow, that was the end of that. So the green crossing the yellow is always going to be our final confirmation to get in or out. But we was in that sale, we done with it by the time it crossed back here. So we could have got in here and then we would have got out up in here. I ain't gonna overdo that. I'm gonna go check the chat. If anybody got any questions, I'll go over them. Oh, okay. Like the weekly or the weekly,
Yeah, the weekly SADR. I've been
yeah.
using that one the past 2-3 weeks, and I've been making my entries for gold and silver at the open, and I can ride those to the 75% and 100% how it been the past 2 weeks.
Man, Joy over
I
there.
just took the gold one to the 75, and last week I took the silver to the 100.
I remember you did say you was looking for gold to hit the 75 weekly. I'm
Yeah,
glad you
because
said that.
gold just hit the 75 not too long ago on the weekend.
Yep. So I'm glad you said that for everybody else. That's what you would do on a day like this. It's Tuesday. It hit the 100% daily ADR. It's ADR. That's how we're coming up with our TPs and stop losses. So if I go in here, that's the daily, 1 day. Change it to the 1 week, those going to give us our new targets. Like Joe just said, it hit the 75%. So our next target, if you still holding this buy, is to hit the 100%. And I was explaining how I'm looking for the 3 levels. It came and hit the Mayo on the hour last Friday. So Monday was a day of rise. Tuesday was a day of rise. We're looking for Wednesday to come up. It can happen before Wednesday or whenever, or before. It can happen Wednesday when the market back open, but it can happen before the New York session. Basically, we're just looking forward to hit the 100% ADR. Like Joe said, hey, you got it Monday. You could have got it Monday here. You would have hit the 25, hit the 50, and that was in the first hour. That thing over this hour candle. So that first hour came and hit that. We just hit the 75. Now we're going for the 100. And if it hits the 100 and you still holding that trade, because this definitely was a reset off that Mayo. We can go to the month, and for the month, oh, it don't hit the 100% for the month. Yeah, because the month's almost over. January. Yeah, so that's it don't hit the 100 for the month. Yeah, so we're just basing it off the week at this point. That's crazy. Yeah, I do remember showing this too. It did a perfect W off the open on the month. Came in, hit it. Bro, they had the low set. It was choppy. It respected this whole little zone right here. Came and did that final leg. Catch up across the monster going up. Holding the blueberry off the open. And slowly but surely, it came and hit all those targets. I'm going to start calling out my trades like that too. For people that's holding like that. And then still calling them out on the daily for the day traders. I'm just learning to trust this thing more on top of everything else I already know. Because that ADR is a game changer. Yeah, that's it.